In a world where the Fed is tightening short-term interest rates and the Trump administration is loosening financial regulations, why have the bank stocks been so tepid? Even after the group's big rally earlier this month, the S&P Bank ETF is still lower for the year. Granted, the financials shot up into the stratosphere right after the election last November, but over the past 4 odd months, the whole cohort has cooled down considerably. When the Fed just gave us a rate hike last week, exactly what the banks were hoping for, the market yawned. What's going on here? Consider the case of SunTrust, STI, a regional bank based in the Southeast and the Mid-Atlantic, with a stock that slightly outperformed the rest of the group, up about 1% year-to-date. 2 months ago, SunTrust reported a robust quarter, with the company posting a 3-cent earnings beat off of an 84-cent basis, inline revenues. More important, the bank's net interest margin, the difference between the lower rate that they pay you for your deposits and the higher rates they charge for their loans, increased by a meaningful amount, a really meaningful amount, and their credit quality improved substantially. Plus, SunTrust's investment banking division had a record quarter. The company also got strong results from Pillar Financial, a commercial real estate business they recently acquired. However, after spiking a couple of bucks the day after the company reported, the stock hasn't done much. So is SunTrust ready to roll higher? Let's take a closer look with Bill Rogers, the chairman and CEO of SunTrust Banks. Hear more about his company's prospects. Mr. Rogers, welcome back to Mad Money. Good to see you, sir.
Thanks,
Have a seat. Thank you.
Yep.
Thank you.
Yep.
You know, I've got to tell you, I look at all the things that you're doing, and I look at the environment where the president wants deregulation, and I start thinking, isn't it time that some banks that are really in growth regions that are growing kind of break out of the pack? I mean, it does seem like you're either constrained by the ETF or people don't have the right mindset.
Right. Well, you know, depends on what the pack is. If I look at over the last 5 years, we've broken out of the pack.
Right,
I mean,
clearly.
we've clearly outperformed sort of our peer group and the index over that period of time. So in the long race, we sort of think we're already breaking out of the pack.
That's a very good point, and you have, and I think a lot of you've made a lot of changes. You have almost no bad loans. Your region is great. Tell us about what's going on in that region that you've got better loan growth.
Yeah, sort of in the core Southeast. I mean, our business is national by nature, but it has a bias towards the Southeast. Just the Southeast has a little bit of a beta attached to it, right. I think. We saw that in the financial crisis, but we're seeing the other side of that now. And that beta is attached to great infrastructure, great tax base, let's weather, let's put that into play. The East Coast ports, 15 of the top 25 MSAs are in the Southeast.
And can you speak to what you think about, say, the stress tests, the Trump regulations, and whether things are going to loosen up so that you can have more control of your own capital to reward shareholders? You
know, if you think about the stress test, it was constructed to build capital,
right.
And now it needs to optimize capital. You know, so I think we've gotten through the build phase. And regional banks have been released from the qualitative part of the stress test. So that's the first step. So I think over the next few years, we're going to be able to optimize our capital much better than we have been in the past.
Well, that'll definitely change the price-to-earnings multiple, what we're willing to pay for bank earnings.
No doubt.
Now, you're doing some things that I think are different from other banks. We've often felt that people are not financially literate in this country through no fault of their own. You've got a financial wellness program that I think could differentiate you and really drive a lot of business towards you. Can you talk about that?
Well, first, as you said, we've got to really sort of set the stage of there's a lot of stress in America from a financial standpoint.
Really
I mean, 75% of Americans are in some type of financial stress. 40% don't have $2,000 saved for an emergency. One-third don't have anything saved for retirement. When it's go to millennials, it's 60% don't have $2,000. So this is a fragile recovery from that standpoint, and we view that we've got to play a real role in that.
So how does it work? Do you connect with your HR department? Have you got some people who are the HR departments of different firms? Are the firms initially corporate bankers of yours, their clients, and then you go in?
Well, we started with the company we know best, SunTrust. Okay. So we did our own survey work, and I made the assumption that our teammates might be different. And boy, was I wrong. We were exactly represents what America represents. 40% of our teammates said they were not, only 40% said they were in good financial shape. 60% were worried. So we started with our own teammates. We worked with a company called 8 Pillars. We created a program. We put financial backing behind it. So if a teammate starts a savings plan, if they go through the program over that course of time, they can get $1,000 in match.
Really?
So over the course of the year, they will have taken a course and they will have $2,000 saved for an emergency. We did that survey work. All of a sudden now, 80% of our teammates feel like they're on good financial footing. Guess what else happened? Performance has improved with that group, and retention has improved significantly with that group. And now what we want to do is offer it to others.
Sure. What are you telling people who have big student loans?
You got to start with savings. You got to start with that emergency savings plan first. and then you've got to start working that. You've got to start working that debt down. You've got to start that first. I mean, you got to pay debt down before you start all the other spending.
Well, I salute you. I get discouraged. I had a seminar with my friend Ken Fisher, who runs Fisher Investments today, and we were both saying no one's saving for retirement. No one seems to understand the drawbacks of not putting some money down in the student loans. I think you're doing fantastic work.
And we're doing this with other companies, and the results they're seeing, we've got about 30 companies now under pilot. We've got some great bellwether Atlanta names that you know, like Delta and Home Depot and Genuine Parts, Haverty's, and they're seeing the same kind of results. That when people go through this program, 100% virtually have started an emergency savings account. So that starts. Well, and their increase in their budgeting, double the amount of people are now, running through a budgeting process.
Well, I think this is going to be great for the bank, but it's really great for the clients, which I love.
Great.
Thank you so much. That's Bill Rogers, Chairman and CEO of SunTrust Banks, doing a terrific job. Stick with Cramer. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.